What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for February 22nd, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So we open with a big red to start a short week coming off of President's Day. We essentially had an overnight session in which Russia is essentially put their nuclear subs in high alert and have essentially moved some bombers in tactical position around Ukraine. That started off the day, and then only to find out that essentially the futures are trying to price in a 50-point basis move. Now, 2 weeks back, there's the things that we've been talking about inflation could be coming back at some point. I wanted to see if the consumer snapped before then, but they did not. The consumer is still in a very, very bad position. We have to understand that Bostic talked about a 50-point basis move about 2 weeks ago, about 2.5 weeks ago now, before Powell had come on just after the monetary policy of a 25-point basis move. Last week, Bostic again talked about a 50-point basis move, and we had a hot PPE last week, so PPI, excuse me. And so, with that being said, today we got some more hot info straight out the gate today. Today we had essentially at 9:45 we had the PMI information as well today, which again came in a little hot today. We have existing home sales that are continuing to fall, which is definitely not a good thing, something we've also talked about. Tomorrow, we don't really have, let me double check here. We don't really have anything tomorrow. We do have some mortgage rate stuff tomorrow, but that's not going to have a big impact. But then on Thursday is a very big day. We have initial job claims, GDP, PCE, and then we also have Bostic again on Thursday. So that's very, very important. Bostic's been holding a lot of weight. And then we have the PCE on Friday. So we have a lot of data this week, and so very data driven right now, trying to determine what the next core is going to be, and things that are coming in hot is not a good sign. Oh, and we must not forget is that tomorrow is also FOMC meeting notes at 2 p.m. Eastern Standard Time. Now, why this is going to be more critical? Now, most of the time, these meeting notes essentially go into the last minute monetary policy. But what we have to understand is before it's been extremely, extremely generic to this point. But now that we're starting to talk about a pivot, Powell did mention in essentially his speech following monetary policy that there will be a lot of detail in these notes about a potential pivot. Now, what comes of those notes could be really, it's going to have a lot of weight. Now, the thing is, if it's showing at all that, hey, that, things are going to be good, we could start running back up, which is crazy to say because a lot of inflation is starting to get hot again. And it's concerning because of the fact they're talking about a potential 50-point basis move. So this phase one that we thought we were in, potentially moving to phase two, where we're kind of go stagnant with the rates, is no longer something that we're thinking about, because if we're finding out that core is getting sticky as it just dropped 0.1% from our last core, which is not good because of the fact that we've had all those 75-point basis moves. We had a 50, a 25 coming into this year, and it has hardly put a chink in the armor, and we still are trying to get down to a 2% inflation rate, which they projected and pushed out to 2025. It was supposed to be July of next year, but now they're saying it's not going to be till 2025. Now, this is a big concern because if we have to keep raising rates at one point, right, rates were up to like 20%. Are we going to see that? I don't know. It depends on how bad inflation gets. You have to understand, not only are you battling inflation, but you're also battling the cost of things, right? And understand that if not only inflation gets high, but then you also are battling against essentially the rates, the Fed rates, in which being able to purchase a home, right, or get any kind of borrow any kind of money in general is going to be well out of just about everybody's grasp at that point. And so you're going to see where people are starting to liquidate homes. You're going to see a massive supply. And then all the things that I've talked about to this point, you're going to start seeing massive supply come on so people can try to afford these things. And that is going to be the issue, is that people are going to try to keep up. And again, once everybody starts doing this at one time, again, there's going to be more layoffs. So we haven't even started to see more layoffs that are currently coming, especially in tech, and then going from that point. So we are in a very, very bad position right now. Something I've talked about the consumer right now is, which I've been paying attention more to than inflation. Inflation is starting to circle back around, and we already know the consumer is in a very, very bad spot. Their savings rate is very low. Credit card debt is very high. People are taking HELOCs to cover the home line's equity or credits, to pay for basic expenses, and that's not why the HELOC should be taken out. It should be very rare that's even taken out, right? Is to be financially smart about it. You wouldn't take a HELOC out unless you are trying to invest in something would work, business, whatever the case is, to generate more money, not to live off of. And so that's the problem, is that what's going to happen, there's just going to be this massive supply of potential homes that will start driving down prices. And this is where people are thinking that we could go down to even lower than 2008 as far as home prices. And if that's the case, then those people that are essentially have that HELOC on their home, they're essentially trapped and underwater on their mortgage payment, right? And having to pay all these things, and understand that a lot of these particular things, credit cards and stuff like that, they're not a fixed rate. So the more the interest rates go up, the more you're going to be charged for whatever debt you're carrying month to month. And so that is a huge, huge problem. And you can see how this thing could spiral out of control very, very quickly. And so with that being said, that essentially puts us where we're currently at. So what we're going to be doing from essentially this point forward is taking these data sets until the next core. And then we are getting out of earnings mode. The market's starting to sell off. Again, the market's trying to price in another 50 to 75 points than what it currently is. You can't say the stuff is priced in. It is priced in something I tried to explain before. When they quote unquote price it in, that means the market is going to dive to where a 50 point or where a 75 point basis would be. And then when it hits that point, it will bounce, and then it will start recovering and pushing back up. So yes, at one point we did have 50, one point we did have 75 points. The market's going to retrace back to that point. And then what's going to happen is once it hits that point, then it will start to consolidate and start pushing up again. But this is something I've explained all last year. You can watch all my videos. I had them actually marked off last year. And then things got pretty hairy, especially when we started getting that 35 point basis move, or that 3,500 mark. When I was saying we could potentially hit like 100 basis points, and that roughly around that a 3,500 would be a 100 point basis move. It's where the market was kind of pricing it in. And so I think roughly around that 3,800 would essentially be, the 3,800 would roughly be about a 75 point basis move if we went with that. So we could potentially see roughly the 3,800, excuse me, would be a 75 point basis move if that was the case. Now, once the market starts pricing it in and adjusted, and the Fed futures point that way, we normally tend to lean that way when we actually come into monetary policy. So given the data sets that are starting to come in hot, that means the Fed are going to have to come in with at least a 50. And then if the next core inflation is even higher, now you're starting to look at potentially 75 points or a 100 point basis move at that point. And then you're going to start introducing panic if that next core is not, there's no control over it, because again, there's a point to which we were at a 20% interest rate. imagine 20% interest rate, right? Plus high inflation, right? There's no way you would be able to purchase anything, a car, a home. Businesses would be hurting, work would be hurting a lot. And something we've talked about, you want to see pain for the Fed to actually start laying off rates. At that point, you would see pain. You would see a lot of pain and not very many people working at all. It would be a very abysmal period of time. And so that is what we're aiming for, worst case scenario. And if we don't hit it, that's great, right? And so this is what we have to prepare for and going forward. Now, even if tomorrow the FOMC wants to talk about potential pivot, right? You have inflation that's telling you otherwise now. Like the inflation is starting to catch up with everything and telling you, no, that's not the case. What the case is things are a lot worse than what they seem. And we still haven't seen that, right? I think we'll see another big wave of inflation, just like we did around springtime of last year. We're going to see it springtime of this year. So you're going to get that huge uptick. Are we going to go over 9.1? I would hope not, considering that if we start creeping well back into the 7s and 8s, that means you're going to get some really heavy interest rates being applied so that it doesn't run away, right? The Fed is not scared. If they have to lay it on, they will lay it on. And to make sure that the inflation stays down, right? It's their legacy at stake, and so they'll do whatever it takes, and that's been proven to this point because massive amounts of people are losing their job as Fed continue to battle the rates. But it's a very tough situation, but it's also twofold, as they've printed 40% of the money supply back when the pandemic hit. So this is the outcome. This is what happens when you print 40% of the money. You can't print 40% of the money, expect nothing bad to happen. This is the nastiness that follows when that happens. You're living through a historical time or when 40% of the money supply has been printed. And again, there's nothing pretty about this. This is what happens. You're trapped between inflation and the Fed battling inflation with high interest rates. So it leaves a lot of people doing whatever they can to survive. And so with that being said, I'm not going to beat that with a dead horse. Tomorrow, we're going to wait for the FOMC minutes. Again, there's supposed to be a lot of detail in there about a pivot. Again, I think all that is pretty much null and void at this point with these hot reports coming in. I think more so what's going to happen is Thursday, with all the data that we're getting for Thursday and for Friday, that's going to play more into potentially whatever's there. If the Fed talk at all tomorrow, that the thought or the idea that a pivot is even possible, if there's any kind of length in that discussion or whatever about a potential pivot, that might bring some bullish sentiment to the market. Otherwise, if it's not, it could be some major selling and some major pain tomorrow. Potentially even more, we get more bad data sets for the rest of the week. So this week could end up pretty nasty. I think if there's any kind of positive sentiment out of tomorrow, that might just drive us up enough to get back to potentially 4,100, and then potentially even drop more. The fact we haven't even bounced, we're starting to go back into the no bounce, which is definitely not good, because this is all daily, weekly, monthly support that we're just pushing through with no bounce. Very little bounce today. So that is what's concerning. So with that being said, we'll go look through some technicals real quick. I'm not going to continue to beat that with a dead horse. We're very reliant, like the Fed said, on data. And so that's how we have to move forward from this point. Now, tomorrow, hopefully we can open up back over the 420 tomorrow. If not, if this thing opens below, again, the 4K mark, we're in some big trouble, I think. The next point essentially I'm looking at is the 39.50 potentially, and then leading into all the data in FOMC could be a strong possibility. Again, if there's any kind of positivity, maybe we can break back to the 4,100. I think that's about the extent as where we're going to land, waiting on more data to essentially show its face for the remainder of the week. So like I said, we're going to have to wake up and play the price action of the overnight session. This is the way you're going to have to take the market. This is the way we've been having to take the market over the past year. You can't assume that over the next 6 months we're going to go up or we're going to go down. You have to take it day by day, and it's strictly given price action and what is currently going on with the market. So we give levels, and we'll see where we open and then try to play whatever range that we are looking for the next day. So again, tomorrow it's going to be big if we can hold over the 4K. If we can, potentially maybe we can push back up essentially to the 40-80 mark tomorrow, before the FOMC minutes. Again, it really just depends on what's going to come of that report will dictate the next move. So we play the next move. This is pretty much how we're going to have to play until essentially there's a bigger catalyst that's going to drive us, in my opinion, down from that point. So that's kind of where we're at and what we're looking for. Now the dollar, again, the dollar is still holding that to 104, which is good for the Bears, bad for the Bulls. Bears still want this thing over 105. Again, if this thing gets over 105, this thing is going to start screaming up to new highs, and that's the issue and something we've been talking about. Is we don't want this thing screaming up to new highs. It just means there's going to be more pain in the market. So that is my concern with the dollar. Bitcoin is interesting here. It's holding the 24K mark. I want to see with something that started to happen when we started kicking off last year is that crypto kind of did its own thing because of the fact of the worries of inflation. I want to see if crypto can have its stand on its own legs and essentially be driven by the fact that it's essentially an inflation hedge. And so it did get some steam off of that originally going into the beginning of last year, but then kind of died off. When there's all the other concerns with the just general market sentiment. So we're gonna have to see how Bitcoin does play with everything. It still needs to break 26K mark. It still needs to break the 30K mark. But the nice thing is slowly starting to pump back up. Again, we're going to have to see how the market does play out on crypto in itself. That's essentially why crypto was developed back after 2008. So being said, we wait and we see where this opens. You don't want this thing to break back down below the 21K mark. If we do, you're going to start seeing some new lows. All right, we had this big pump in the market in general. We want to see if Bitcoin can break away from everything. That would be good to see, as essentially that's why it was developed. So I'm going to have to see there. Tesla started to get some pretty heavy selling towards the end of the day. Again, Tesla has a lot of support here, roughly around the 185. If this thing does break 185, again, you're going to start getting some big dips back down to potentially 160 and down to 140. I think there are some big dips. Depending on what fuels this downside, we'll see how much further Tesla can drop from there. But again, this time around is going to be very different. If inflation continues to run, I think everything's going to be reset, even making new lows. The general market, everything will come screaming down, in my opinion, if inflation continues to start coming back in waves, as you'll start to see 50-point basis moves back in the board, potentially even 75, depending on how quick inflation starts to push back up. So we shall see. But if inflation does start rising and interest rates do start increasing, tech is going to be hit, and Tesla being one of them. They've had this huge parabolic move, had about 100-point move. This one will be, once it starts getting some sell pressure, this thing's going to come down pretty fast. And the same you can say with NVIDIA as well, as it's been pushing pretty hard. If NVIDIA can't hold above essentially the 208 tomorrow, this thing could potentially drop all the way down to 190 tomorrow. Maybe not tomorrow, generally one day. It has made a move in a day that big, but we'll have to see. It does have earnings as well tomorrow night. So we do have to, or not tomorrow night, but tomorrow night you got NVIDIA earnings. So if it does bad, we'll have to see what happens with that. But NVIDIA is definitely one I want to watch. If there is a lot of sell pressure, we have to see how they do on earnings as well. But if they do bad on earnings, this thing could really start getting cut down to the 178, potentially even down the 168. And again, whatever feeling it could be even more. But I expect at least to pull back down to there. If it does do good, I don't see it topping past essentially 228 on earnings. But we'll have to see. We'll have to wait and see on that one. BA, it's starting to lose its juice. Something I talked about. It needs to hold 203 tomorrow. If it breaks down below that, value is going to be hit pretty bad. This thing could start selling off pretty heavy. It's got some what look like strong supports, but haven't been really retested. That's the problem. So you got support here at 193, the 175, and then right here at the 153. So really have to see bulls. You need this thing to hold that or potentially start pushing back up to the 121. Again, something I've been talking about up to this point. You have this huge parabolic move that's ran for about 3 months or 4 months. Really, it needed to back test, and it hasn't done that. So you can at least probably take at least half of this move back, which is around sitting around 168. See what fuels it down to this level. Again, if you get more panic, again, you could see potentially even newer lows than that. So that's something you have to keep in mind. JPM, still holding that level. Bulls, you want this thing to break and hold over 144. Bears, you need this thing to break below essentially the 130 mark to start reclaiming 50% of that move. So you're still looking at like 122 roughly. This thing could land right now. And again, all depending on what's feeling the downside. Again, this thing took a 50%, almost a 50% haircut here on earnings, and then some of the comments that were made. So we'll have to see what does come in here. But looking at the more so around the 328 is what we're looking for Goldman Sachs. I think this thing can really easily hit the 292, but we'll have to see there. Again, I don't want to make these videos too long. There's a lot of information I've stated multiple times on the thesis that I'm talking about. It's very important to be watching data sets. It's very important to be watching price action right now. Price action is going to dictate what's going on because right now there's a lot of misdirection and a lot of different things. And so even though things are really bad, we're starting to see that the banks also did come out today and start talking more about a recession and everything else. So that did help fuel the downside today. So we'll see what happens coming up, and then we take it from there. We go day by day and see what direction we have, see what data sets we have, and then take it from there. So as long as you have risk management in place, then you should be more than fine. But with that being said, go ahead and drop a thumbs up, make some comments about what you think is currently going on, and then I will see you guys in the next one.